Once again, I would like to welcome everyone to our sixth lesson in the Market Profile Beyond the Basics course. We've covered some interesting material so far, and I'm going to try to give you more and more trading strategies and trade setups based on some of the concepts and some of the techniques that we have been discussing and introducing. We will begin by going over the disclaimer. Trading and investing involve high levels of risk. Future results can be dramatically different from the opinions expressed in this course. Past performance does not guarantee future performance. The presenter may or may not hold positions in the financial instruments discussed. All right. Lesson 6 today is going to address trading the open. Now, there are a multitude of different approaches to trading the open, and certainly we can't cover them all in even just one course, let alone a single lesson. So what we're going to do is to begin to look at different approaches where we can integrate some of the concepts that we have learned to help us get a better handle on trading the open, because the open is the open of a day session. I'm talking about the day open and not necessarily the evening session. As a matter of fact, definitely not the evening session open. I am focusing on the U.S. day session open. There are certain parameters or things that one has to take into consideration if in fact you are going to trade the open, because of the general characteristics of the open. First of all, everyone that has ever traded should know that the open of a day session is always an incredibly volatile time. The reason for the volatility is there are a lot of market orders that are coming in, and the market makers are adjusting different positions, and there are a lot of gyrations and fluctuations that take place at the open. Now, interestingly enough, from a trader's perspective, anytime there is volatility, there's also opportunity. And that is why it behooves us to look at the open and see if we can make sense of this volatile period, and if we can, in fact, at times capture some of the opportunities that may present themselves during that period of time. It is also a very challenging period to trade because of the high volatility and because of the uncertainty and lack of coherent movement or direction in the market. It is often challenging, and certainly it is not an easy time to trade, and therefore this is not what a beginning trader, or where a beginning trader should always or should ever really start engaging with the market. As enticing as it may seem, and it's often sort of how should I describe it? Sort of alluring to see the rapid movements that take place at the open, and how one could have made so much money so quickly. But boy, if you make the wrong entry, that same power that you see starts to move against you, and that can really hurt at times. So one has to be very careful in trading the open, and we are going to study some approaches that help us to sort of sort out what might happen at the open, and then begin to look for ways to enter or to place a trade during that period. All right. Now, we have to look at the open in the context of the overall market. So we will begin by looking at a 10-20 minute profile. And here on this chart we have a number of 10-20 minute profiles, and we've previously discussed, the reason that we like the 1020 is because it gives us the flexibility of being able to separate the day session from the evening session. And on these profiles here at the very far left, we begin with a day session, and then naturally this is our first day session here on the chart, and then the next session that follows is of course an evening session, and that is the sequence as we move throughout the chart. So the next profile that we have is another day session. And if you will just take a brief glance here at the development of what's going on, in the day session we end up closing here within value. We open the evening session within value, but we close above the value area high. So as you can see, we do close above the value area high, and the following session we open right at the point where we close the evening session, and the prices drop back down for a retest of the evening session value area high. That level there, that level holds, and long and behold, prices come back up and shoot and actually take out the high of the evening session. That's actually a very bullish open, and one of the things that we will be looking at is where that initial period begins to move and where it begins to test, and whether the test is a positive or a net, meaning does it hold or does it in fact fail. As we continue moving throughout the chart, we have another evening session that's followed by another day session, and ultimately we have another evening session at the conclusion of the chart back here. Now, when there is a particular day that we pick that we want to trade the open for the day, and let's say in this case we want to trade the open for this particular session, we need to begin looking well before that session, before we think about even trading that open. So our strategy in many ways will be planned well before the open. And our strategy is going to involve looking at both of the preceding sessions, the actual day session that happened, as well as the evening session that preceded the open. So let's take a look together at how we go about this analysis to prepare to trade the open for this particular day. We need to begin by analyzing, as I mentioned, these two sessions. Well, what do we do? How do we analyze them? And what do we need to look at? Well, for starters, the very first thing that we want to look at as profile traders, we should always take a look at profile developments. And we need to take a look at what was happening in each of those profiles. So first of all, where is my value area high, value area low for each of the sessions? For the first session, or the day session, it was quite high within the range of that session. It's up here. And then for the evening session, the value area low is higher than the value area low of the day session, and yet the value area high is just a tad above there. And so for the most part, we could say that the development that occurred in the evening session was really a continuation or a continuity of the development that was occurring during the latter part of the day session. It would just continue to move in that same range. We extended the range perhaps a tick or two above, and we certainly did not extend the range anywhere below the value area low of the preceding day session. So generally speaking, what this tells me is that we were basically at the end of the evening session or at the beginning of the next day's open, we were pretty much in terms of the value area where we were the day before. As a matter of fact, if you take a look at it, There is a close right here, and there's another close here. They're actually very close to one another. If anything, this would be akin to what we would describe as a gap up, because prices are now going to open a tad higher than where we closed. So if we discount, or if we completely eliminate this evening session and only look at day sessions, this particular open is up here and the close was here, and we did gap up about a point, or about five ticks. So there was a slight uptick to the upside, or gap to the upside. Now, on the surface, that looks and seems to be a rather bullish open. And that's what's interesting here. As we begin to analyze and delve a little bit deeper and use some of the new acquired tools and skills that we have at our disposal, you'll begin to see how you will be able to uncover things that may not be so obvious to the naked eye. So this was a very positive, very bullish day, and we had a continuity of that day in the evening session. We even gapped up. All that seems to be very bullish. Well, that's good and fine. Let's continue on and take a look at some other interesting things and see how that helps us. And now we're going to introduce the settlement period. We talked about it earlier in terms of the general vocabulary, but now we're going to talk a little bit more about what it is and why it is really a very important period in the market. Now, the settlement period, in this case, we are looking at a chart or profiles of the ES Mini. Every instrument has a settlement period. However, in the case of the ES Mini or other futures commodities, the settlement period is usually the last period of the day. For the ES Mini, that happens to be a 15-minute trading period. So it is unique in that way on the profile, in that all of the letters that we see on the profile represent 30-minute periods, with the exception of the settlement period. The settlement period is the only period on our profile chart that is a 15-minute segment. Now, that's not why it is important. There are a number of reasons that make that 15-minute period incredibly significant. Usually it will appear on the profile on the day session as N period. So here's my settlement period right here, right all the way up to here. Oh, okay, up to right there. There's my settlement, the low of the settlement period and the high of the settlement period up there. Now, back to why that settlement period is so important and so critical. Well, let me, before we talk about some of the things that we will look at vis-a-vis the settlement period, the reason the settlement period is important is because it is the time when the professionals are settling their positions at the end of the day session. So it could mean that, in fact, many of them are still bullish on the market, and so they'll leave positions open expecting continuity and prices to continue to move higher. Or on the other hand, it could be that they decide to settle, and they decide that they want to close their positions, exit the market, and they do so because they want to take their profits. They anticipate a change in the market direction, and therefore it may be time for them to exit. Now remember, these are the folks with the smart money. These are the folks that truly understand many things about the market that we don't, and they have the wherewithal to influence the market. And this is why it is important for me as an individual trader to try to get some understanding of what they're doing during settlement. Or are they in fact increasing their positions, and am I seeing a lot of additional new buying come in? The settlement period will give me a lot of insight about what is likely to happen in the future at the end of the day. Now, what are some of the things about the settlement period that help us to learn about what's happening in settlement and garner this valuable information? Well, one of the first things that you want to look at is the range of the settlement period. The average range for the settlement period on the ES Mini is about 3 points. Well, what does it mean when I have 5? A settlement period of 5 or a settlement period of 6 points, double the average. That in itself is a significant development in the market. It tells me that during settlement there was a strong push to one direction or the other. The next important thing that I learned from the settlement is where the close is relative to the range of the settlement. Did I close in the middle? Did I close at the bottom of the settlement? Or did I close at the top of the settlement period? Also, the level of volume that was traded during the settlement period. And remember, we discussed earlier that that settlement period is a 15-minute period. And so for me to be able to identify exactly the true volume in that candlestick or in that period, period N, if you will, I would need to look at a 15-minute chart, and I would look at the volume bar statistics, the footprint bar statistics on the chart, and that will immediately tell me the total volume for that settlement period. So what does it mean when I have higher than normal volume at settlement? Well, it tells me that something big was happening at settlement, and I better pay attention and try to figure out what they were doing at the end of the day. Were they coming in to buy, or were they settling to exit as fast as they could? Now, sometimes the settlement period has very light, very low volume. Well, that also could be significant in that it could be that really they've decided to stay in the market. There's no movement and really no discernible direction that may be coming, and so it may be that the market may end up floundering for a while, or it could continue and in fact they've left their positions open in the market. All of these things we can't really definitively identify what they're telling us until we look at the evening session and what happens and what follows the settlement period. Now, we've been looking at the 1020 chart from a profile perspective, or using profile charts. Now I've switched gears and I've brought back our 1020 chart using candlesticks and using footprint data. It shows us a very different picture, but it's really the same exact thing that we were looking at earlier. It is not really any different. So if we take a look at the 3 sessions that we were looking at, this being the day session, this one here, this is the evening session that follows, and this is the next day that we're looking to trade or that we're interested in trading. If we look at them together, really they are no different than if we were to look at them from this visual. This chart and this chart are really showing exactly the same information, but they're showing it in different ways. And that's what's really important, because when you begin to appreciate how it's helpful to look at things in different ways and to begin to extract the right information from each visual, that really helps immensely. So now we're going to move back to the 10-20-minute chart and see how this is going to help us prepare for trading the open for this day that is yet to come. So really up to this point we're really still looking at things before the open. So we're looking at things this way here, prior to the open, looking to the left of this big red candle. Now let's quickly review some of the things that we have on this chart some of the other elements that we've put on the chart to help us. I have the 20 simple moving average, and hopefully by now you've figured that that is a standard fixture on most of my candlestick charts. I also have the 5 simple moving average, another standard fixture, and if you'll notice the consistency of colors. So now you should begin to recognize anytime you see a blue line on one of my charts, or the charts that we're using for the course, that is going to be a 20 simple moving average. If in fact you see one that is light green, that is going to be a 5 simple average. So if you come across any charts that are not labeled, go ahead and make that assumption. It is going to be a safe assumption. I always stick to that same code, so visually for me it's very easy to identify the moving average levels. All right, so that's an easy part. Then of course we have what we talked about quite a bit, the footprint chart, and then we have these footprint bar statistics below right here for each of the sessions. We have them here and we have them here. Now we also have something else on the chart that's important and significant. Hopefully you've recognized them. We have 3 different color dots. The first color, the light green, that's our KVT. And remember, the KVT is different from the filter. The red is a filter and the magenta is another filter. So the KVT has identified for us the volume levels that are unusually high for a 10-20 minute period. So those are significantly higher than the average, and they're about 1 standard deviation above the average. That's the light green. Now, the red dot tells us that these levels had cumulative total traded volume at them that actually exceeded, that was over 20,000 contracts. So that's our red, and then the magenta tells us that it exceeded 50,000 contracts. If we take a look at the concentration of where the volume is, it's also kind of interesting in that we are top heavy. And this should not really be a surprise to you, because if you take a look at the profile, notice how most of the activity and most of the volume on the profile was up here. So we were in fact top heavy, and you see we just sort of sailed through this area. This was again a very powerful buyer here that pushed us high very, very quick, and then we continued most of the time trading in this new value area up here, and we didn't really come back to penetrate very much into the territory that this buyer had staked out for themselves. So we now know that this was a strong area, or there was a lot of development and intense volume activity here. You can be sure then we know this is where the smart money was participating. The big question now that we need to answer is, who was more powerful? Were they the buyers or were they the sellers? Now, obviously there was a buyer that decided to push prices higher, but once the prices were pushed higher, what happened when we came to this new level? Is the market accepting, or is the market actually refusing and rejecting these prices and pushing them back down? And that's the important question, which we will continue to answer together piece by piece as we sort of look at the clues that the market activity provides us. But before I leave the footprint for this 10-20 minute period, I want to go down here and show you the imbalance that takes place when you get such a strong buyer. Take a look at how many green levels there are in this area here, down here, when the buyer was forcefully pushing the market higher and just it zoomed very, very quickly through that area. And if you notice also, if you begin to do the comparisons between the numbers, they are significant. And then we began to get a little bit of selling activity here, but the buyer took them over again, and here's another area of green imbalance, and we continued on and on. We begin to see that the intensity of the battle doesn't really begin and take place up here, and that's when we began to develop the cluster. As a telltale sign, that alone in itself, by virtue of the fact that we did not close at the very high, and prices pulled back from the high to close down here, that should indicate to you that that buyer has encountered some serious selling activity. Otherwise, if this accumulation of activity, or all this was buyer driven and the buyer was really the dominant force, we would have expected at minimum to close way up here close to the high. So already we have an inclination to believe that sellers have stepped up, and in fact there is some selling pressure that the market has encountered. So far we've relied on the volume imbalance to show us the areas of strength for the buyer, and we've relied on our volume filters and the KVT to identify for us areas of intense activity, and we've been able to discern from this intense activity the aggressive sellers that are present in the market, and that in fact the buyers don't completely have their way once we got up to this level up here. Now there is something else on the chart which we haven't yet begun to look at, but it's something that we have briefly or we have encountered in the past, and that is our footprint bar statistics. What do they tell us? And I am going to quickly hone in on a couple of interesting numbers. The first one that I want to bring to your attention is the volume. Now remember, the total volume here is about 1,109,000, and I can't compare it with the evening session that preceded it. I need to compare it with the last day session before it. And here in this case we had about a little over a million here. So obviously we have a little bit more volume on this day session, but not significantly more. Now the data that I'm really interested, that is going to help me, is my delta max, delta min, and delta finish, because it will tell me who was last in actual control when we closed, and to what extent and to what degree were they being challenged. So we go back to the footprint bar statistics, and we extract these numbers that we need, and they're all right here. The delta finish is the number at the bottom. Here is my delta min, minus 3596, and right above it is my delta max. I don't have to do any calculations. All I have to do is look on the footprint bar statistics, make sure I've selected those statistics to appear on my bar, and when they're there, all I have to do now is just extract them, pull them out of the table, and take a look at them. So when I pull the numbers out of the table, I have 26011 for the delta max, I have negative 3596 for the min, and then a finish of 2168. And the key question is, who was last in control? Was it the sellers or the buyers? So let's quickly analyze together this data and see what it tells us. We had a max delta of 26011. So at our peak during the entire day session, that is the highest delta that we arrived at, when the buyers were just sort of having their way completely and pushing everybody out of the way. That is the max level that we arrived at. Now, The min level, let me go back here, flipped a little too quickly. Okay, the min level is the minimum delta level that we were at, and this is minus 3596. So obviously this was a very bullish day. The sellers never really racked up anything anywhere close to the max delta that we noticed, and it's quite evident from looking at the bullish nature of the day that the bulls were really in charge for most of the day. But our question was last, at the very end of the day, who was in charge and how was the battle going? So we have to take a look at the finish. And the finish is positive, so obviously at the end of the day, the sellers were trying to assert themselves, and the bulls were trying to overtake them. And they managed to overtake them to the tune of 2168. So they managed to pull up 2168 out of minus 3596. And the calculation I always like to look at is to divide the absolute value of the finish over the absolute value of the last, whether it's a max or a min, to get a percentage of how much the opposing force was able to push back the dominant force. At the end, when we were at the close, the sellers were really pushing. They were the dominant force, and the buyers were trying to overtake them, and they were able to take them to about 60%. That's still relatively bullish. Not very strong bullish anymore, mind you, but nevertheless, that is a rather bullish finish. So keep that in mind, keep that number there, and then we'll go back to take a look at our chart. And now the other piece of data that we have that we want to analyze is our evening session. And you see that the evening session sits right here. And let's take a look at what happened. Prices in the evening session actually took off and went up a couple of ticks above the high. So we made a higher high. We opened right here, right at about the close. And then we ended up, in fact, closing higher than the open. So it gave us this green spinning top, if you will. Now, interestingly enough here, take a look, and this is where I cautioned you once before, when you see a very positive imbalance up here, like we do right here, and then a close that's below this positive imbalance, the volume imbalance, you should know right away that this was not buying activity, this was sellers hitting the ask. So buyers were actually buying from them at the ask, but really the dominant force were the sellers. So sellers were selling at the ask, not the bid, and this is why you see this positive imbalance right here, and that's a really interesting and important telltale sign right away that you want to look for. So from this, you should know right away that there are sellers present in the market. They are strong, they're pushing hard, and as a matter of fact, the chances of continuity, and all this, you've learned this before the open, from the prior day and from the evening session, that there is now negative pressure in the market. So it is very interesting to sort of do these analysis and get a general idea about potential direction and sentiment in the market. The challenge that I often find traders have is, how do we trade this? And you know, when do I enter? When do I exit? And the target and so on, to create a trading strategy from the concepts and the things that we are seeing before us. And this is what we are going to continue to address in our lesson today. First, I want to go back and sort of hone in on something that we began our discussion with, which was the settlement period. And I always like to draw a rectangle around the area of the settlement period, as you see here, to get an idea about where it is on the chart. And by the way, that is an invaluable tip right here. We're going to transfer this rectangle with the parameters of the settlement period low and the settlement period high onto our candlestick chart, and you will begin to see how that will help us with our trading strategy. So now I have borrowed information from my profile chart, and I have placed this information, the settlement period, on my 1020 chart. And this will now help me to begin looking at my trade setup. And this is usually a potential high probability trade setup when it does occur. So what are we going to look for, and how do we begin stacking up the setup, if you will, and organizing and looking at it? Well, the first thing that I was hoping that you had at least noticed was the fact that the 20 simple moving average was sloping down. Okay, and it was even here up to at any of these points it was sloping down. If it wasn't obvious to you that it was sloping down, which really it should have been because it was quite a slope, the value of the simple 5 moving average is below the 20 simple moving average. So the 5 is not above it. The 5 is below it. And here at this point, well before anything had happened in this day, the 5 was in fact below it. Yes, the 5 was pointing up and sort of asking everybody to come in for longs and so on, but in reality, as you begin to see the data unfold and as our analysis will continue to show, the trade was really to the downside, and that was seen well before the open. Already, by virtue of the positive imbalance here that closes well below the area of positive imbalance. See here, when it was buyers, notice what happened to the price action. With this imbalance pushed up, prices went higher. We have positive imbalance, close lower, divergence. Warning, keep your eyes open. Something out of the ordinary is happening here. This is not what you would expect. So obviously this stack of imbalance that's green really is not buying, it's more selling. Sellers are active and are pushing prices lower. So the first thing that we have identified is our 20 simple moving average is dropping. And if we take a look at the general activity of what's going on, what's happened is prices have come back up and have pierced through the 20 simple moving average and have managed to close above it. And typically that actually is a bullish sign. However, in trading in general, we have the rule of twos, meaning that the market always likes to double check itself. So it pierced once, and second time around, it just needs to come back and test and make sure that this truly is a level of support. And in this case, that second test never came in the evening, so there was probably a very high probability that this was going to come in the following day. Now, there are other things that we want to look at the setup, but mind you, the most important thing that I really want to emphasize is the fact that I've brought in the settlement period as a translucent rectangle on my chart right here, because that really gives us a very important part of the setup for this strategy. We have a positive day session. So this is dropping, and we actually had a positive day session. All right, now what happens next? The evening session closes within or below settlement. So take a look at where the evening session closed. Within, it is within settlement or below. If it closed below, that's even more bearish. But in this case, it closed within settlement. So all the conditions are being satisfied. We got a nice big positive day. We got another day which ended up closing within or within settlement. It's not below, so it's within. Now, the next thing is the evening session gets a negative finish. And why do we want the evening session to have a negative finish? What does that tell us? Well, if we get a negative finish, who was really that negative finish against? Buyers. So the buyers were trying to push up, but the sellers really were pushing back, and so at the end of the day, we ended up with a negative finish on the evening session. Now, in addition to that, we get the new day opens within or below settlement, which it does right here. The new day opens right here, so it opens within or below settlement. In this case, usually if it opens below settlement, it's going to shoot right down, and that's a stronger bearish day than this one did. This one opened within the settlement period. And the trade is we would go short, well, not if or when prices drop below the settlement low. So here's the low of my settlement period right here. The level is at about, let's say, 1863 and a half. And so technically, when we break this level, we are going to move lower. However, that is not the best time to enter. You could enter the minute that happens, but quite often that happens in the first 10 minutes of the open, very early on. And then what happens as soon as you see prices dip down like that below settlement, they rise back up again. It's that volatility. So even though you have a pretty good idea about what's going to happen, you want to wait, and you don't want to jump into the market prematurely. And we are going to rely now on a different chart to help us refine the entry. So now we established our bias for direction, and we want to use our tools again to better time the entry. You could, in fact, do it right at the open the minute the prices drop here, and then, let's say, put your stop loss way up here. But and that will work. And if you take a look at eventually how things worked out, they did. But that's not all. That's not really the most effective way to trade. There are better ways, and we have the tools that can help us refine that. So why not use them, and why not employ things that will help us refine the entry? So some people prefer that. The minute they see the prices drop right there, it's easy for them. They go ahead, put the short in, and then if it jumps back on them, as long as it doesn't take out the highest high that was created between either the day session or the evening session, they're in good shape. If it does take out the high, then they're out of the trade. However, why not wait to refine the entry? And let's take a look together now at how we're going to refine the entry. Now, to refine our entry and to get in at a better place, naturally we have to go to a shorter time frame. Now, I'm going to drop down to a 30-minute time frame, and so we've dropped down from the 1020 to the 30 to refine our entry. And let's take a look together at the different pieces of information that we have on our 30-minute chart for the ES Mini. And by the way, this, believe it or not, this is exactly, we're looking at the same exact period in time, the open of that day session, and I'll show you now how it all sort of comes together and it all correlates. But first, let's identify what we have on the chart and where we are on the chart vis-a-vis the 1020 day. Okay. The first thing that I want to highlight is my moving average, because they are really an integral part of this strategy and they will help us a lot. The one color that we didn't talk about earlier in the lesson was the red, because we only had the 20 simple moving average and the 5 simple moving average shown on the 1020 chart. Now that we've dropped down to the 30-minute chart, we can also see the 50 simple moving average. So at least recognize that that's what that red line is. Now, we were looking at the evening session, and this was the value area high for the evening session, and this is the value area low for the evening session. So in terms of tools, on my 30-minute chart, I have also applied a 1020 profile so that I can take a look at how my candlesticks behave, or how the periods behave relative to the parameters of the 1020 profile. Now, I also have my volume point of control for the evening period. And remember, these lines are for the evening session, the value area high and the value area low, because the day has not yet started. Let's take a look at what happens at the open, the very first period when the market begins to open. And there's our period. All right, that is the open right here. That's the first half hour, and if you can see 6:30 right above it, it says 6:30 because I am on the Pacific coast, and even though the market does open at 9:30 on the East Coast, 6:30 is the equivalent time in Pacific time, so don't let that confuse you. I've had some students write to me and ask questions or baffled by that. The time is accurate and is correct. My charts just happen to show Pacific time. So this is my very first 30-minute period. Interesting. Take a look at how that first period, 30 minutes, drops all the way down to the value area low and goes all the way up to the value area high, as if to taunt us. Okay, figure it out, guys. What do you think? Am I going up or am I going down? And it opens the range all over the place. Now, as far as volume, take a look at our dots. We have a bunch of blue dots, and if you remember, the blue dot on the 30-minute chart was for any volume above, it's a filter, any volume above 8,000 contracts. And I also have some KVT, but very little, right here in this area, right here. There's one level 2 and one level 1, but I don't see very much else. That's why I also like to use the filters in addition to the KVT. I take that back. I see some KVT here in this period, right here, and right here some level 1 KVT there as well. But let's go back to that early open period. You see a lot of the 8,000 volume, and that obviously at that point in time, this was all buying. It pushed prices higher, back up to the open, and actually closed above the open. But by the same token, we had quite a bit of volume imbalance to the upside here, and we ended up closing a little lower. So that tells me the buying pressure is not that strong either, that there's really a duel here. Neither side is very dominant in this first candle. When I see that in terms of the range, we've dropped below my settlement period. Remember, it was right below 1630. And so I could have entered, and I have my short here. But look at how much time I would have to stay in the trade, going back, up and down, and so on, before it actually pans out for me. So yes, you could have followed that rule. The minute that price moves below the settlement area, it may be time for a short based on what we were looking at. But that, as I mentioned to you, is not by far the best point to enter. So really, the first 30-minute candle did not give us any clear or good entries. So wait. All right, so I know that I'm looking for a short, and I'm waiting to see a rationale or a logic for me to take my short. Now, what happens next is we begin to see the next 30-minute period. The range does not expand much higher, goes up 2 ticks above the value area high, drops back down, and closes as a spinning top here. Again, I have intense volume in it. It tells me, well, perhaps there was rejection at the value area high. I'm not able to move much higher than that, but it's really non-conclusive. It isn't a big negative bar. It's still it's still difficult. It would be a very aggressive entry to actually take the short way up here. That would be a very, although in some respects that aggressive entry is the best and will give you a very tight stop. If you think about it, your stop is going to be the high of the evening session, which is just about 1 tick above. So this would have been in terms of risk management, it's an aggressive entry, but minimal risk, given the bias and the setup that you know. Now, let's see where a more logical approach would have been, and let me share with you why I also would not have taken it that quickly up here, even with the minimal risk. There's some subtle clues here that I want to clue you in. First of all, take a look at my 20, simple 20, and my 50. Who's above whom? The 20 is above my 50 on the short time frame. That tells me that in this time frame, we're not really ready for a big drop yet. That prices need to work themselves out. It's going to take some time for the 20 to move closer to the 50 and start heading lower. As a matter of fact, even my 5 is still above the 20 simple moving average. These are the kinds of things that really seasoned traders look at very carefully. Price is key, and right now it's telling me price is not really ready to drop significantly. At the very best, yes, I may get a 1, 2, maybe 3-point drop, but it really is not ready for a breakdown. Simply by looking at the moving averages. And folks, this is why I really like them, because they are representative of price over certain periods of time. They give us very valuable information. And remember, ultimately it's price that's going to determine whether you're going to make money or lose. So all these other things that we look at, volume, footprint statistics, and so on, they are secondary. The primary thing is price. Never underestimate the power of those moving averages. And by the way, when you see 3 of them within your value area, as we do here on a 30-minute chart, that is a chart that is really in consolidation and not quite ready to make a move yet. So let's see where another potential entry would be. We have our bias, and we know we want to go short. So an early entry would be right here, the minute that we take out the low of this prior candle, and my guess or my target would be, if I entered here, that we're probably going to go back for a retest of the low here. Now notice what happens. We actually do drop down, but we do not go all the way down here for a retest. On the contrary, we end up going back up for another retest of the high. This is really honing in on the best entry of the day, because now I am seeing that the 5 has dropped below the 20, which tells me that negative sentiment is increasing. I am coming up for a retest of the value area high. That test failed, and so if this test fails again, that increases dramatically the probability of success of my trade. And now let's take a look at what happens. I get another doji up here, and then I begin to see when this candle opens, prices drop. The minute I take out the low of this candle would be a confirmed entry to the downside, and you even begin to see the simple moving average sloping down hard and hitting below, and then when you look at the continuity of what's happening on the chart, the 20 also eventually will cross the 50, and prices continue to drop dramatically. Now, it's kind of interesting as the prices drop, see what happens here. A lot of volume comes in, and you can see all this significant volume, all this 8,000 and so on, and it does push prices back up higher quite a bit. But you really don't see a strong imbalance, not a big sequence of greens on top of one another. This should give you pause and should not give you a lot of alarm. What happens often is when prices break down and they drop away from value, lots of buyers step in trying to bring it back into value. In this case, it didn't happen. If, in fact, you had felt that based on what you were seeing as far as volume, and you decided to exit even at the close of this candle right here, you will have made some money, although very modest. But then you can get back in again when you break the low of this candle here again. However, if you had continued to stay in the trade, you will have done quite well. The trade continued to drop even further, further and further. So this was the early entry back here, and I talked about the later entry up here, and we had two opportunities at the top. Those would be what I would label very, very aggressive entries at the top, especially the very first one here. The second one is more palatable. This one I would have felt far more comfortable taking than this one here. But eventually both of them panned out, and any short that you would have taken based on the bias that you developed from your analysis would have been fruitful, useful, and would have produced positive results for you in terms of a short trade. Now, it's always very interesting also to see when you get big clusters of volume like this followed by very light volume, and you see that there's a huge drop takes place when that happens. When that happens, that's telling you that really the buyers have walked away, and they've basically let the sellers have their way. They haven't found they haven't found a price that's attractive for them yet to respond to come in. Let the sellers bring it down to a level of comfort that we will welcome, and then we will respond and come back into the market. So as you can see now, using the profile concepts, we get a fairly coherent idea about what's likely to happen. Using the profile tools, we begin to structure the trade, and we begin to identify the entries based on what's happening relative to the profile. This is how profile traders trade, using the knowledge and the concepts from the profile and the tools of the platform. That is the key to success with the profile. You really have to build one piece on top of the other, and sort of integrate everything together to get positive results from the market. And that's why quite often you will find that the profile will give you an edge, because it will help you see these opportunities in advance, or prepare for the opportunities, I should say, in advance of them actually taking place. All right, I guess with that we are going to conclude our presentation for this lesson. And as usual, I wish you the very best of success with your trading activity, and I invite your questions, and I promise to answer them.